everyone, thanks for joining us and welcome to this episode of Century 21's Gold Table Talk. So today's really cool. I'm really excited and privileged to have in the house Justin Easthorpe from Ooba. Justin, welcome.
Thank you very much.
Yeah.
Great to be here.
And you know what happens to me all the time? Ooba is O-O-B-A, not U-B-E-R. And Ooba is South Africa's leading bond origination company, best team of people across the country that help us and our property professionals every day get you, the home buyer and seller, well, actually the home buyer, the best rate on their mortgage, right? Now, I'm thinking most people buy houses on mortgage.
The majority of people in South Africa purchase property on mortgage, absolutely.
They do, hey?
Not mortgage really, bond. We call it bond in South Africa.
Yeah, I mean, I did. Everything's bonded,
Yes.
Cars are financed,
Absolutely.
and it's pretty much the same thing.
Yes.
So I wanted to pick Justin's brain, I want to pick your brain today about things that come up a lot in our industry on a daily basis, and I think we want to spread the word and inform people more about what it is, particularly around first-time home buyers, and things that are really important for someone that's never bought a home before to consider.
Yeah.
So, this is how it works in South Africa. We get a bond on our house, and we pay an interest rate on that bond.
Correct.
And it's either over 20 years or over 30 years.
Yes.
What is that bond calculated in? So we've heard in the market that there's a repo rate in South Africa and there's a prime lending rate.
Yes.
What's the difference?
Okay, so the repo rate is the rate in which the Reserve Bank charges the commercial banks for that money. The interest rate is the rate in which the retail bank charges the consumer for lending.
Me, the buyer.
Correct.
Okay.
Right.
So there's a rate that the Reserve Bank, the government, borrows money to the banks.
Correct.
FNB, Standard Bank, ABSA, SA Home Loans. But then we pay a rate that's higher than the repo
Yes,
rate.
Correct.
Okay.
Yes, that's where the banks make their money.
Aha.
Yes.
Over whatever, 20 years,
Correct.
30 years,
Correct.
etc.
Correct.
So how does a first-time buyer figure out what is the best rate that they can get? Now, I know that what they do is they contact a company like yours.
Yes.
So either they go to your website or they find you locally or through a Century 21 property professional. What does someone like you and a professional like you need from a first-time home buyer to determine the rate that they can get?
So the rate is determined by a bank scorecard. So
Yeah.
what will happen is the bank will determine what risk this client is to the bank.
Okay,
The higher the risk, the higher the interest rate, because the bank is taking a risk on that client.
I see.
So if you come to me now and say, Justin, I want to purchase a house of 500,000 Rand, I want 100% bond, what interest rate will I give you? I will tell you, I can't tell you, because it hasn't, we don't understand what your risk rating is or how the banks view your risk rating.
Okay.
So we understand from our average population what sort of interest rate we receive from the banks across all of our applications.
Yes.
And that's around prime minus 0.4 at the moment, changes all the time. But on an individual basis, we will not know until that application's gone through the bank scorecard. And then by using somebody like Ooba Home Loans, you are able to see what each bank is prepared to give you.
Okay. So is it fair that banks have a different way of determining risk? That they don't vary too much, but they have their own criteria?
Yes.
So if I want to buy a home now, what do I need to provide you with from my personal information to determine my risk and the rate options you can get me?
It would have to be a fully completed application form to the banks.
Okay.
So if you come to me and you say, Justin, I've purchased a property, here's my offer to purchase, go into the banks and you're employed, I will need a salary slip.
Okay.
I will need 3 months bank statements.
Yeah.
I will need a completed home loan application form, a copy of your ID and a copy of the offer to purchase.
Of all the applicants, so me
Of all applicants.
and a spouse
Absolutely.
or whoever.
Yes, absolutely.
Okay. And then you go about the business of engaging that data with the banks.
Correct.
If I want a bond.
Correct.
And then you come back and you give me some options.
Yes.
Okay.
Yes. And those options would be a loan amount that may not be within your suspensive condition. Once again, let's go back to 500,000 Rand.
Yeah.
And your affordability is only showing 400,000 Rand.
Oi.
We present that to you.
Okay.
If we have the ability to, we'll motivate it back to the banks to say, no, this client does qualify for 500,000 Rand based on X, Y, Z.
Got it.
So that's the first one, is are we able to get you the loan amount required?
Got it.
The second one then is, what sort of interest rate can we get? What sort of term can we get? So if you're 50 years old, you can't ask the bank for a 30-year term.
Got it.
But if you're a first-time home buyer in your 20s and 30s, absolutely we can request for the banks to consider a 30-year term. There is a difference between interest rates on 20% and 30 year and on 20 years and 30 years. Once again, we go back to risk. The risk on a 30-year term is a lot greater to the banks than that of a 20-year term.
Wow. Okay, so I'm just thinking now about something you said about an example of 500,000 Rand.
Yes.
Now, there's one thing that excites me about purchasing a property, and that is there is a price bracket in which a first-time homeowner can purchase without paying transfer duty.
Correct.
So transfer duty, I understand that to be the tax that we pay
Yes.
on a property to take ownership of that property.
Absolutely.
But there's a transfer duty bracket.
Yes.
So if I'm a first-time home buyer, and to all the first-time buyers out there, what is that threshold where I can buy up to this point and I don't have to pay transfer duty?
So it wouldn't necessarily be a first-time home buyer either.
Oh,
so the
any
purchase price
type,
is-
yeah.
So 1.1 million and below.
Woo,
is
that's
the
pretty
set.
cool.
From transfer duty.
Yes, only.
So there are still fees attached to that transaction because
Okay.
the attorneys need their money as well. So there are going to be transfer fees,
Yes.
not duty,
Yeah.
and registration fees.
Okay,
Then
so
yes.
let's stay on that. So I had a shocking conversation with a friend recently. She was purchasing a home. First time purchasing a home, so for her there was still quite a learning curve. And it's possible that a lot of us think that the purchase price or the offer price that we place is all we pay on a home. So apart from transfer duty, if applicable, what else should a buyer budget for? And I know that you've already got that in your calculators that you'll lead us to just now.
Yes.
But what else does a buyer need to understand, that it's not just the purchase price?
No.
Yeah.
So the purchase price is one thing, then anything associated to the transaction. So it would be an attorney affecting transfer for that, so moving the property out of the seller's name to the buyer's name. There is a fee for the transferring attorney. There's also a fee for the registration attorneys or the registering attorneys, which the bank instructs to register. It's the bank's choice to instruct which attorneys register the property. So there's that cost as well. And there are calculators where you can work out what those costs would be. Over and above that, there is also an initiation and valuation fee with the banks, which can be included in the home loan or
Sure.
paid up front.
Okay.
And then looking at, once you've taken transfer of the property, don't only look at your bond repayment, you've also got HOC, which is brick and mortar cover, if you own a freestanding unit as well, which is compulsory with the banks, and your levies if you're moving into a sectional title. So not only your bond repayment, you've got your levies, you've got your rates and taxes, you've got your insurance. Some banks
Building
may require
insurance.
building insurance.
Yeah.
Some banks may require life insurance as well. So
Oh.
there are additional costs. And it is prudent for some purchasers to take out life cover when taking out the bond as well, to ensure that their family is protected.
So life cover is in case something happens to the homeowner, and that life cover then covers the mortgage or the bond on the property. So the banks make sure that they are guaranteed regardless of what happens.
So the life cover isn't necessarily a condition.
Correct, mandatory,
as brick and
as
mortar
building
is,
insurance, yeah.
but
It's
is always
recommended.
advisable.
Hey, okay, that's a huge tip. Big things to budget for. So it's not just the purchase price
No.
and what the monthly repayment is. Now, does a buyer have to consider what type of mortgage that they get offered from all the options that you get in terms of fluctuations in the prime lending rate?
Yes, so I mean there are two options. There's what we call a variable interest rate, which is you stick to the interest rate that is prescribed by depending
bank.
on the banks,
Yeah.
or you could choose a fixed interest rate. Now, in our environment, we don't see many people fixing their rates because our interest rates fluctuate so much. So I will give you an example.
Yeah.
During COVID, there were a lot of people saying, should I fix my rate? Prime is at 7% now. What should I look at fixing it? So what the banks do is they take a long-term view of what they expect the interest rates to do. So at 7%, we were asking for fixed rates, and that was 1.5 above prime.
Really?
So your fixed rates are always higher than the variable interest rate. And once again, it's the individual's choice as to whether they want to take the chance of keeping that interest rate if they reduce, or keeping your monthly installments the same over between 12 months and 5 years.
I guess there's pros and cons to that, because during the 2 years of COVID where real estate was really doing great, the repo, the prime lending was really low, and it was amazing, and we benefited from that.
Absolutely.
But then of course there is a dark side, and that is being able to budget for the eventuality that it is going to climb, and you look at international trends. And I've seen the great property professionals do that. They say, let's budget a buffer for this eventuality, this possibility. Okay, so those are the two options. I also think that the most common one is the variable one.
Yeah,
so we'll just move with the times.
Yes.
It's good for everyone, and it's harder for everyone
Absolutely.
at the same time.
Yes.
Okay, awesome. So any tips that you can give to someone looking to buy a home, whether it's first time, second time, 10th time, currently? So we're sitting in 2024. Any tips? I mean, off the top of my head, I can think about just maybe really get a pre-approval.
Yeah.
Anything else that you could help us?
No, I mean, I think the vital part is understanding what you can qualify for.
Yeah.
There's nothing more heartbreaking than finding a property that you really want, and then come submission time, you realize that the banks won't approve the facility because you really can't afford it. So speaking to a professional, getting an understanding of what your affordability assessment is and how much you can afford. And then once you understand what sort of price range you're in, then you start looking for the properties within the price range and the areas within the price range, and just make it all go through smoothly. What is also quite exciting when we talk pre-qualifications as well is that we will have your documentation at hand. So if you've purchased a property, from the time we've given you the certificate within 3 months, we have all of your documents. It's all we're waiting for is the offer to purchase, and we submit the application through.
So it goes a lot more seamlessly.
Yes.
Give me a tip on that in particular. So is there a validity period for a pre-approval that once it's lapsed, I must get another pre-approval because the banks think that maybe my life has changed? How long is that typically valid for?
3 months.
Is it 3 months? So when I get a pre-approval and I'm pre-approved for R1 million, I'll go house hunting and keep going on that process. But if I don't buy a house within the 3-month period, I need to get another pre-approval.
Yes.
Why is it only valid for 3 months typically?
It's because the banks don't know whether your income has increased or decreased, or your expenses have increased or decreased.
Okay,
so,
if I've lost my job
absolutely,
or moved employment,
absolutely,
or there's been a change in our family. Okay.
I mean, let's talk about that as well. So it's also very important that should you have got a bond and something's financially happened to you between the time you've received the bond and the time that you registration, the banks do a reassessment prior to giving authority to register.
Okay.
So what we always urge people to do as well is once you've got this bond, please don't go and buy a new car or go and get a new credit card or open new store accounts. Wait until...
Don't change your spending.
Don't change
spending, okay. Or your accounts.
Yes.
Because that will kick in a need for a new one.
Correct. New assessment.
Alrighty, okay. So, I mean, calculators on how to calculate exactly what the costs are on any particular purchase price. It's available on the Ooba website. We also have a calculator on the Century 21 website. Ooba is our national partner, so I mean it's the same calculator. So go and do a calculation on what the costs are. get a pre-approval, and that's as simple as just filling out a form on your website.
So there's two ways, and we mustn't use the word pre-approval. We must use the word pre-qualification.
Oh, forgive me. Okay.
Pre-approvals come from the banks.
Okay.
And there is a difference, but let's talk pre-qualifications through Uber now. So what was your question?
No, it's now stuck in my head. I have to like pre-qualification. Okay.
Yeah.
So I think the first step is get a pre-qualification from a company like yours, from Uber. And that can be like fill out a form and a rep or a professional will get hold of you.
Yes.
And then I think once I, for example, get pre-qualified for R1 million, then I can look at the calculator and see, okay, now what are the other costs on this purchase price?
Absolutely.
Okay.
So there are two ways of getting an affordability assessment through Uber. There's the Uber bond indicator, which is where each agency has got their URL link, where they can pass it on to the potential home buyer, and they can do a high level affordability assessment.
Oh, I see. Okay.
So what they will do there is they'll register. It will do a soft credit check to see whether they've passed bureau score. After that, they're going to input their income and expenses, and it will determine an affordability assessment. But then what will happen is, as soon as that potential home buyer has registered, we then receive a list the following morning where we want to make contact with that client to move them from an Uber bond indicator to a qualified buyer certificate. The difference there is that we obtain all the documentation from the client to verify the information, application form, 3 months bank statements, latest salary slip, and we do a thorough analysis on the income and expenses to ensure that no mistakes are made, and we can give them the amount that they qualify for.
That more thorough step could result, because it's now being done in detail and in depth and really looking at the best ways to manage it, that could result in a better rate for the buyer, possibly.
Remember, rate is all determined by the bank's
risks,
what the bank determines risk to be.
Yes.
But what does influence interest rates as well, over and above that, is what sort of deposit are you putting down? Because once again,
that's
we go
a big
back
one.
to risk. If you're showing the bank that you're prepared to take some risk, the banks are mitigating risk, the interest rate will be better.
Awesome. There are no two deals that are the same.
No.
On the same property.
No.
It depends on the human being and so many things. Their employment, their credit score, the deposit, their credit history, a whole bunch of stuff. And so it's always worthwhile that a buyer speaks to a professional at Century 21 or at Uber, because it could be the difference between your dream home or not your dream home.
Absolutely.
Okay.
Absolutely.
I actually learned quite a bit today.
Good.
Yeah. We love you, you know that. And we love Uber. And it's always a pleasure chatting to you.
Thank you very much.
Until the next episode, guys, thank you for listening in and being with us today. That was it for today's episode with Uber. Until next time. Cheers.
Cheers.